Hey friends, welcome back to the channel. If you open any crypto community page right now, you will see the exact same thing. The crowd is going crazy over new meme coins. Traders are arguing about who is faster, Solana or the new Ethereum Layer 2 networks, and analysts are drawing endless charts for Bitcoin. But while 99% of retail investors are playing in this digital casino, corporate giants from Wall Street and Silicon Valley are playing a completely different game. Right now, in the spring of 2026, multinational corporations are building a new global economy on a technology that actually isn't a blockchain at all. Yes, you heard that right. Today, we are going to dissect a project that hacked the very concept of decentralized networks. A project whose board of directors includes Google, IBM, Boeing, and Dell. A project that right now processes more real commercial transactions than the rest of the crypto market combined. We are talking about the Hedera network and its native token, HBAR. Get comfortable, brew some coffee. Today, I will explain why Hedera Hashgraph is not just another Ethereum killer, but a technology that has quietly already become the foundation for corporate Web3. And most importantly, we will break down why the HBAR token might just turn out to be the most undervalued investment of this decade right now. Let's dive in. Let's start with the basics. To understand the greatness of Hedera, we need to understand the main problem with all traditional cryptocurrencies from Bitcoin to Ethereum. They all operate on blockchain technology chain of blocks. Imagine a single-lane road. Cars, which are our transactions, line up in one long column. If there are too many cars, you get a traffic jam. To get through faster, you have to pay the traffic cop, the miner, or validator a massive bribe in the form of gas fees. And until one block is verified and closed, the next one cannot begin. It is slow, it is expensive, and it is terribly inefficient for a global economy. Then, in 2015, a brilliant mathematician and computer science professor named Dr. Lehman Baird asked himself a question. Why do we even need to arrange transactions in a single chain? He went ahead and invented a completely new consensus algorithm called Hashgraph. Listen closely to how this works because it will blow your mind. Hashgraph is not a blockchain. It is a data structure called a Directed Acyclic Graph. Instead of waiting for their turn in a block, the nodes of the network are constantly communicating with each other. Baird called this protocol gossip about gossip. Imagine you learn a secret and tell two friends. They immediately tell two more, and those tell two more. The wave of information spreads through the network exponentially, like a wildfire. The nodes don't just pass along the transaction, they pass along the history of who passed that transaction and when. And then the second feature kicks in, virtual voting. Because every node knows the entire history of the gossip, they don't even need to waste time actually voting to confirm a transaction. They can mathematically calculate how the other nodes would have voted. The result? Absolute magic. While Bitcoin does about 7 transactions per second, and Ethereum hovers around 15 to 20, Hedera Hashgraph right now, on its base layer, processes 0 transactions per second. And this is not some theoretical limit in a testnet, like many projects love to promise. This is real, live throughput. But speed is not everything. The main advantage of Hashgraph is absolute finality, or aBFT. If a transaction goes through the Hedera network, it is finalized in 3 to 5 seconds with a 100% mathematical guarantee. It cannot be rolled back, and the network cannot be branched, meaning no forks. This is the highest level of cryptographic security that currently exists. Now let's talk about the exact reason why crypto anarchists and Bitcoin maximalists hate Hedera. Its governance structure. If you go to a Reddit thread full of hardcore crypto purists, you will read things like, HBAR is a centralized scam. It's run by corporations. It's not true crypto. Oh, friends, they are so blind. The very thing they call a weakness is actually Hedera's nuclear weapon. The fact is, Hedera is governed by a governing council made up to 39 of the world's largest organizations. And when I say largest, I mean absolute titans. Look at this list: Google, IBM, Boeing, Dell, LG, Ubisoft, Standard Bank, Hitachi, Mondelez. These are companies with a combined market capitalization in the tens of trillions of dollars. Each council member runs their own network node, has an equal vote in decision-making, and can only serve on the council for a limited time, a maximum of 2 3-year terms. Now let's use some logic. You are the CEO of, let's say, Boeing, or a massive multinational bank. You need to transition your entire logistics or financial settlement system to distributed ledger technology. Are you really going to trust your trade secrets and billions of dollars to a network run by anonymous miners in basements? A network that could split in two at any moment because the developers had an argument? Of course not. Traditional finance and megacorporations require legal transparency, predictability, and guarantees. Hedera gave them exactly that. This council is not some secret government. It is a trusted bridge between the Web3 world and the traditional economy. Companies at the level of Google are not going to ruin their reputation by participating in some shady crypto startup. If they deployed their nodes on Hedera, it means their top lawyers and engineers examined the code under a microscope and said, "This is secure." Furthermore, by 2026, Hedera has taken a massive step toward decentralization by rolling out community nodes. This means the network is gradually opening up to regular users. But the foundation of stability laid by the corporations remains rock solid. So, the tech is amazing, and the corporations are on board. But what are they actually doing there? Are they just sitting around looking at charts? This is where we get to the best part. Most crypto projects are proud of the fact that people trade dog-themed meme coins or NFT pictures on their networks. Hedera, on the other hand, deals with the real sector of the economy. And the numbers we are seeing right now, in the spring of 2026, are simply mind-blowing. Example number 1, Atma.io by Avery Dennison. Avery Dennison is a Fortune 500 giant that manufactures tags and packaging for everything from Adidas clothing to medical supplies. They created the Atma.io platform, which tracks the carbon footprint and logistics of billions of products. Every single movement of a product is recorded on the Hedera network. Today, this platform generates millions of transactions per day. You buy sneakers in a store, and the record of it flies straight into the Hashgraph. Example number 2, digital coupons through the Coupon Bureau. In the US, there is a retail coupon standard that hasn't changed in decades. Now, the entire American retail industry is shifting to a new universal digital standard known as AI 8112. And you know what it's built on? The Hedera Consensus Service. Every time an American scans a discount coupon at a supermarket checkout, that transaction goes through Hedera, preventing hundreds of millions of dollars in fraud. Example number 3, real-world assets or RWA tokenization. This is the megatrend of 2025 and 2026. Wall Street is moving everything onto the blockchain. Real estate, government bonds, money market funds. Institutions are choosing Hedera because it has one critical feature that neither Ethereum nor Solana has, and that is fixed fees pegged to the US dollar. On the Hedera network, a transaction always costs 0.00011 ten-thousandth of a cent. Regardless of whether the HBAR token costs 5 cents, 50 cents, or $5, the fee in dollar equivalent is always exactly the same. Imagine you are a bank. You cannot plan an IT budget if today a transfer fee is $1, and tomorrow, just because someone launched a new collection of NFT monkeys, the fee jumps to $100. Hello, Ethereum. Hedera's fee stability is the holy grail for big business. But let's come back down to earth. We are not venture capital investors here. We are crypto enthusiasts, and we care about the main question: how do we make money on this, and why should the price of HBAR go up? For a long time, the HBAR token had one massive problem that made many investors avoid it. That was its tokenomics and unlock schedule. The maximum supply of HBAR is capped at 50 billion coins, but in the early years, only a small fraction was circulating in the market. The developers were constantly unlocking new coins to fund the ecosystem, dumping them onto the market. This inflation kept heavy pressure on the price, preventing it from growing. But welcome to 2026, friends. The situation has drastically changed. Today, the vast majority of tokens, over 85%, are already in circulation. The inflationary overhang that choked the coin for years has practically disappeared. The Hedera Foundation has completed its most aggressive unlocks. Moreover, the HBAR token has phenomenal utility. First, it is the fuel of the network. Every transaction, every smart contract, every log entry requires payment in HBAR. Corporations constantly need to buy HBAR on the open market to keep their applications running. Second, staking. Users can delegate their coins to network nodes, securing the network and earning passive income in return. This removes a massive amount of tokens from the circulating supply. Third, voting and governance, especially as community nodes continue to expand. Put 2 and 2 together. The supply of new coins hitting the market has dropped sharply, while demand from the real corporate sector is growing exponentially. The network is digesting billions of transactions. According to the basic laws of economics, this inevitably leads to a supply shock. And when big capital realizes that the free-floating HBAR is running out, the price will react explosively. Let's face facts. Hedera is not trying to kill Bitcoin. Bitcoin is digital gold, a store of value. Hedera is also not trying to poach the gamblers from Solana, where meme tokens are minted every second. Hedera is B2B infrastructure. It is the operating system for the corporate world. It is what the enterprise version of Ethereum was supposed to be, if it weren't for its slow speeds and astronomical fees. Look at the competitors. Cardano has a market cap of tens of billions of dollars, yet basic decentralized exchanges still struggle to function on their blockchain. Hedera's market cap has often been disproportionately lower, even though it has 100 times more real transactions and real-world partners. This is a classic market inefficiency that smart money is actively correcting right now. So what should we expect from HBAR in this cycle? If we look at the current macro environment in the spring of 2026, dropping interest rates, state-level crypto legalization, and the absolute boom in the RWA sector, we can see that HBAR is sitting in a perfect storm. The conservative scenario for HBAR at the peak of this bull cycle is a return to its all-time high in the 0.5 to 0.57 range. And consolidating in that zone, this is a target that is mathematically justified simply by the current growth of the network. But there's a baseline, more aggressive scenario. If the real-world asset tokenization sector continues to pour trillions of dollars into crypto, and major US banks start publicly using Hedera for settlements, the project's market cap could easily catch up to the CoinMarketCap top 10. Under this scenario, a target of 1 to 1.5 per coin looks absolutely realistic. Yes, that means the market cap would need to grow to $35 to $50 billion. Sounds like a lot? Let me remind you that Solana's market cap exceeded $100 billion entirely on retail speculation. Meanwhile, HBAR has Fortune 500 corporations behind it, generating actual GDP. Let's wrap this up, friends. Investing in cryptocurrency today is a choice between hype and fundamentals. You can try to guess which dog or frog will shoot up 0% tomorrow, and you will most likely lose your deposit. Or you can invest in the infrastructure that right now, at this very second, is quietly processing the logistics of your purchases, your store coupons, and banking transactions. Hedera Hashgraph, with its genius consensus algorithm, incredibly powerful governing council, and zero risk of forks, is not just a cryptocurrency. It is the bridge between traditional business and the Web3 economy. Yes, for a long time, the price of HBAR was asleep, crushed by inflation from token unlocks. But in 2026, the rules of the game have changed. The emission has stabilized, network usage is breaking through the roof, and corporate capital is only just beginning to enter the RWA sector on a massive scale. Drop a comment below. Are you holding HBAR in your portfolio? Do you believe Hedera's corporate approach will defeat the decentralized anarchy of classic blockchains? It will be very interesting to read your thoughts and debate it with you. If this deep dive helped you look at the market from a wider perspective, make sure to hit that like button. It's the best way to support the channel and signals to the YouTube algorithm that we are making quality content. Subscribe to the channel and ring the bell so you don't miss our upcoming videos. Study the tech, don't fall for cheap hype, and invest wisely. Thanks for watching. I'll see you next time. Stay profitable.